Another special episode and another very special guest. So this man, again, it probably no needs an introduction. Some of you already know Aaron, but it's the first time I'm meeting with him, So for the people who are the same, never met Aaron before, so I'm just gonna read through some bio. It's very impressive, by the way. So Aaron Fragnito, is that, first of all, is that an Italian surname?
Yes, sir. Italian. Yeah. Polish, Italian, Irish,
Wow, mix. That's cool. I love that. Because again, co-founder of People's Capital Group. Love the name, by the way. Host of a New Jersey real estate network, a licensed New Jersey realtor, and a full-time real estate investor. Aaron has completed over 250 real estate transactions. It's a big, big number, totaling more than 40 million in real estate in his career. Another big number. People's Capital Group works with qualified investors to create passive returns through local commercial real estate. The owners of PCG are experienced in locating discounted apartment buildings for sale in northern New Jersey and implementing a value add strategy to create max returns for their silent investors. That's a very interesting way you put it here. So it's awesome. To learn more, visit at peoplescapitalgroup.com. That's peoplescapitalgroup.com. And currently, I love the numbers, by the way. I'm a numbers guy. So for you guys who love the numbers, real estate portfolio currently 10 million assets under management. Currently holds 75 plus rentals units in New Jersey market. Closed over 250 real estate transactions, as we mentioned before, totaling more than $40 million. So again, as you know, from the number standpoint, it's going to be a very interesting interview we're going to, have today on. So I really appreciate it, Aaron. Thank you for your time.
Yeah, thank you for the introduction. Love to be here.
Oh, thank you. So I don't know, guys. Again, English is not my first language, so let me know how I did in a bio here. I know it sucked a little bit, but support me. So click the like. Thank you very much. So first of all, maybe Aaron, people love the stories, and again, like being a real estate agent, and have you always lived in New Jersey, or that's where you're from originally?
Yeah, born and raised in Jersey. That's one of the reasons I enjoy investing here. I live 20 minutes from where I grew up. I invest where I grew up, which is right around the Manhattan metropolitan market, which happens to be a good area to invest in because people always need to live near New York City.
Yeah, I think it's a great market. Well, people are like, it's tough at the same time because I know it's not it's a tenant friendly market. Maybe it's not investor friendly market.
Sure. I mean, that's one of the biggest objections, we get, or that's one of the reasons a lot of people don't invest in New Jersey. Now, we do not invest in Manhattan. Now, Manhattan is a tough, even a harder place. There's like super difficult rent control restrictions right now that have recently come into Manhattan that make it even harder to own there than it's ever been. And because of that, a lot of investors are actually coming over to New Jersey because the boroughs are very high priced and you just get a lot more real estate for your dollar across the river here in Jersey. And there's cities where you can commute into Manhattan in 45 minutes and you could pay a fraction of the price you're going to have to pay in one of the boroughs of the city. So we focus on really, North Jersey and buying in cities that we feel are very well priced right now. Newark, New Jersey, Paterson, New Jersey, and quite frankly, something like Hoboken or Jersey City, New Jersey, if you know the market at all in North Jersey, are really overpriced now and up to the cost of where Brooklyn is, and now you look at the Bronx, and these areas used to be really rough, the Billy Joel song, Ride Through Bedford-Stuyvesant alone, like that. It used to be really dangerous to go to Brooklyn, or the Bronx. And now people pay an arm and a leg to live there. So we work off that excitement, that demand for New York City, which some say is the greatest city in the world, but I don't want to say that.
Whoa, that's
whoa.
Yeah, no, that's awesome. I love you. You're in the city, you live in the city, you're born and raised in there, so you just have to stick for the city, man. Maybe it is, maybe it is for you and for the people who live in it. So I wouldn't argue with that. So
sure.
We cleared out the New Jersey market, but again, coming back to your story, maybe you can give, a little bit of your background, how you born and raised, what did you do, how did you discover real estate investing, and how did you ended up, having all these 250, real estate transactions and 40 million, totaling as well. So
Sure. Well, I always had a passion for being an entrepreneur, for real estate as well, which I didn't really even recognize my passion for real estate until I read the book Rich Dad Poor Dad, which
There we go. Yeah.
there you go. I'm sure everyone that comes on your show tells the same story.
Yeah.
I remember my dad had a condo in this like 300 unit complex. We would go and paint it whenever there's a turnover, and I would always say, wow, how cool to be to own a complex like this, and how does that work as a young boy thinking that? So, I had a small landscaping business, a painting business. I majored in entrepreneurship at Rome University and graduated, from there. Really had no idea what I wanted to do with my life until I read Rich Dad Poor Dad around the end, around graduating college. And then I actually moved to Colorado to teach kids how to ski for 6 months. And I read David Lindahl and Trump University. And I spent, a couple $100 on books instead of thousands of dollars, so I always advise, go on Amazon.com and read up. There's a ton of wealth of information out there, just, for $15 on Amazon.com or something. So read all those books. They all told me how easy it would be to develop a real estate investment company. And, you just raise some money and you put down a deposit and you do some inspections, and some real estate.
Yeah.
Obviously, a lot harder than that. So, but I made a list. I made a goal. I wrote it down. I said, I want to own $1 million in net worth real estate, $100,000 of cash flow in 10 years. Okay. I was 23 at the time. I'm 33 now. So, you shoot for the moon, right? Or stars land on the moon. So, and basically I said, okay, to get started, I got to, make connections, save some money, learn this industry. I said, okay, get my real estate license. Looks like a logical first step. So I went back home, got my real estate license, 2010, terrible market, made a $5,000 commission in my first 6 months. That was it. My broker paid me $500 of it and said, read the fine print. So I switched brokers after that and realized he was not working in my favor and, made a lot of mistakes, teamed up with the wrong people to start. One guy was skimming off the top when I was flipping houses and I had to quit claim him off the deed just to get rid of him. And finally, though, I met Seth Martinez, my business partner to today. And, I would put "We Buy Houses" signs on telephone poles. You ever see those before?
Yeah. Yeah. Oh, yeah. I see them online. I'm not familiar with physically. Yeah, I've seen them. Yeah.
Yeah. But back in 2011, 2012, those things worked like a charm. So I would go around in a suit and tie and I'd put up these "We Buy Houses" signs on telephone poles in the middle of summer, sweating my butt off. And, eventually we got some good deals doing that. I got some really good listings doing that. People would call and say, hey, I want to get this for my home. And I say, well, I don't think I could pay that as an investor, but as a realtor, I could sell your home and get that price and I'll earn a commission.
Mm-hmm.
So, some brokers allow that, some brokers don't, but I got a lot of listings that way. And, in a buyer's market, those advertisements really worked. And learned short sales, had a short sale team negotiating people's short sales. Because I was able to get the short sales going, I had a bunch of buyers who wanted to buy those short sales. And, I call up expired short sale listings and say, hey, your agent's doing it wrong. I know how to do it better, and I have the buyers. So made my first commissions that way. Teamed up with Seth, who had sold a medical billing company. He had a bunch of money and was buying properties in Newark for pennies on the dollar. And no other realtors wanted to work with Seth because his offers were all so low. And I loved it though. And so I was learning from him. He was getting really great deals and we found a 6-family together. And I said, hey, why don't we work together on this one? He's great at management and operations. I'm good at, kind of raising the capital, finding the deals. And we bought a 6-family for about $220. We put about $50,000 into it in renovations, leased it up. It appraised for about $450. So we pulled out all of our money plus a little bit of tax-free money on top of that. At the cash out refinance, we were doing the BRRRR strategy before millennials called it the BRRRR strategy, and so that was a good way to get started. We grew up to about 100 doors over about 5 years doing that.
Love it. Love it. Great story. Great story. Yeah. It's kind of, humbling, coming, again, it's a people business, everything, it doesn't matter what type of business do you have. If it involves people, you will get, problems at some point,
Mm-hmm.
because if there won't be no people in the business, there will be no problems, maybe there will be some technology problems. I don't know, but you live and learn, you learn through the process to find the right partnerships, which is very important in this
Mm-hmm.
business. So, but the advice for people, again, as I mentioned before, there's audience watching now and thinking oh, good for you, Aaron, having 250 transactions and, successful real estate business currently.
Mhm.
But can you give me an advice on how can I start? Because I'm not from States. Maybe I'm watching this interview. I'm from Asia or Australia or
Mhm.
Canada. Like, what
Mhm.
what will be this one piece of advice for people who are having a full-time job or looking to get involved into real estate? What would you advise for them?
Sure. So, it is a tough business to break into doing it part time, and that's always a tough question. People say, "Hey, I make $100,000 a year doing what I do with full benefits. Should I, quit what I do and get started in real estate?" Like, no, you probably shouldn't. Like, real estate's hard. It's not the save all end all way to make money. It's
Yeah.
one avenue to make money, and unless you're really committed to it full time, it's hard to be an operator. So the answer is probably work with a company like mine that does something like the Learn and Earn program, where we give you all of our spreadsheets and our documents we use to analyze properties, to make offers on properties. And so you get all of our documents that we use to work with investors and analyze all these apartment buildings. And then you invest with us as well, and you get quarterly financials and detailed updates, and you learn what we're doing as we take a mismanaged apartment building and make it better and make it cash flow really well, and get it to appraise at a price. We can split up a bunch of refinance cash, and you learn through that process and get all of our documents in editable forms. So you can take our spreadsheets and edit them and make them your own, and start analyzing buildings and start getting some cash flow checks in the mail. That's a good way for someone to get started who is working full time, who has some capital to invest. People can start as little as $30,000. So, that's one thing and there's tons of syndicators that do stuff like that. So, look around for the right match for you. Maybe someone even local to what you're doing there. But the other thing is, I did get started as a realtor, and you can be a realtor part time. Okay. You can also wholesale part time, which is when you put a property under contract and assign the contract to another buyer. Now, a lot of gurus say wholesaling is a great way to get started and it's easy. I don't think wholesaling is that easy, actually. I think it's hard because you have to get a deal like really, really, really cheap so that you could sell to a guy like me or you who's going to buy it and still make money on it. There has to be enough meat on the bone for everyone to get paid, and that's hard to do right now in this market. It was good to do when we were going from a buyer's market phase 2 into a seller's market phase 1. We
Hmm.
cleaned up at that time. We went with the market in 2016, 2017, made $1 million wholesaling sheriff sale properties because there was one arena, the sheriff sale auctions, where we could steal properties. And there was another arena, the public market. As a realtor, I could buy these properties and list them on the MLS, where everyone was clawing for deals. So, we had an amazing opportunity as the market changed from a buyer's market around 2015 to 2016, 2017 into a seller's market here. Everyone kind of experienced that in the last decade, and we cleaned up. Okay, and that was good. And that's how you also make money in real estate. You go with the market, you go with the flow.
Yeah.
Right now, interest rates are low, rents are high. People are selling their apartment buildings because the market's gone up for a while. So there are properties on the market. We're seeing more and more apartment buildings for sale. So we see value in the perfect storm of low interest rates and high rents and big demand for rentals here, shortage of housing in New Jersey, to buy apartment buildings and long-term residential rentals. So play the market. Don't go against the market. You're not smarter than the market. You're not better than the market. Go with the market and do something that you enjoy doing. And I don't think you should go start flipping houses. A lot of people say, "Oh, get started in real estate, buy the ugly house in the block, and
Yeah.
hire your brother to fix it up." No way! Flipping houses is so hard to do. You're running a construction business on an 80-year-old home and hoping there's no surprises behind the walls. I've fixed and flipped over 50 houses, and let me tell you, we did great on 9 out of 10 of them. But there's always that 1 out of 10 that's a real sucker, and
Yeah.
that can wipe out your gains on 3 other flips. So we looked at our flipping business after years of doing it, and maybe we're not the best house flippers in the world, but we just weren't really having trouble turning a decent profit for it to be worth the mind-numbing hours it takes to flip a dozen houses a year. So it's a really tough way to make money. The easiest way to get started is being a realtor. You have the real estate commission protecting you. You get a listing, you put it on the MLS, you take some pictures, you field some showings, you do an open house. It's really, a pretty great way to start making some dollars in the business. You do it on the weekends. You can team up with the agent who's doing a lot already, and you're going to work certain hours a week for them, and you're going to split up your commissions a certain way, and you can learn from that agent, be on that team, get leads from that team. There's a lot of ways to get started as an agent. It's no offense to being a realtor, but it wasn't rocket science. It was really the kind of the entry level of real estate, in my opinion. That's a great place to start. It's not where I wanted to end personally. I wanted to build into ownership of real estate, and I think people should have that mindset too to build wealth.
Yeah, definitely. My God, a lot of golden nuggets, guys, here, so make sure you pick them up, pick them up, guys, and just, use them. Again, what you mentioned, so true. I was a real estate agent before, like, didn't learn anything about real estate. I mean, it's one of those spaces where you don't learn a lot.
Right.
You are in the business, but you just you deal with the people mainly, and like, you don't understand the deal flow, like you analyzing, there's nothing of that involved. So it's more the advertising, so, but what you mentioned is so true about the flipping and wholesaling, fix and flip. Like, it's about the timing. And again, maybe, being in a, well, people say that we are at the top of the market. Maybe it's not the right time to do so. And again, going passively, because I came across a lot of people that we had previously on the show, and they been a passive investors in the deals before they started and went and got involved into their own deals as a GP or,
Right.
whatever. So, it's a great way definitely to learn the business side, just observing, like being, passive on a deal and just seeing how the people actually operating the deal, what did they do to increase the value, like how they even pick the location and why did they decided to do so. So definitely you can learn a lot by just observing. I think Babe Ruth told that. So, that's what it is. So what's the main markets you're currently focusing on? Is it all New Jersey or?
Yes, we stick to what we know here. We buy within an hour of our office in North Jersey, which is pretty centrally located to a lot of inner city areas like Newark and Patterson and Jersey City and Morristown. And these markets are all different types of markets, but we focus on middle of the road apartment buildings, Class B and Class C. We buy around the cranes in the air. We buy around the big developments that are coming in, the Class A real estate markets that are being created in these inner city markets. Like, for example, Patterson, New Jersey is creating a Class A real estate market right now. It doesn't exist yet. They're creating high-end condos and storefronts, and what comes after that is home values tend to rise as developers put hundreds and hundreds of millions of dollars into cities.
Can I just, but people who are watching, maybe they have like, are you not scared that there's competition like next door, and it will take some time, for these units like to get absorbed in the marketplace, and it might affect your occupancy at the same time, or like, is it a good thing for you?
Yeah, we pick city by city. We watch saturation rates and things like that. And I think Jersey City has a little bit too much inventory coming to market in the next 2 to 3 years. And I'm not buying in Jersey City right now. There are areas I'd probably look into. I mean, there's some areas where the city is so bullish on development that you just be a fool not to plop your cards, your chips down at this time. But we don't focus like Jersey City. You kind of missed the boat. Okay, so know your market like the back of your hand. And we do know, North Jersey here like the back of our hand. It's so important. So the next city to boom was Newark, New Jersey. Newark, New Jersey has a Penn Station that brings you into Manhattan very quickly. But Newark is plagued with high crime and rough schools. And for years, there's been kind of an exodus from the city. But there's so much real estate in Newark. It's a city built for 500,000 people where 250,000 live there. All right, it's got a rich history. And there's a downtown area that has just boomed in the last 10 years because the city has allowed a lot of development. Shaq just finished a big 200-unit, Class A building there. Queen Latifah has a bunch of buildings going up. So like celebrities are getting in, and this Ironbound area where there's a ton of Portuguese, like beautiful food, great area to go out in. A lot of stuff going on there. Great nightlife, and really a nice market there where you have just a melting pot of America, in one place, and such a booming market. And that's an inner city area, where a lot of people would look at Newark on a statistical chart and say, no way, never, but we see the value in certain pockets of Newark. And now we see that happening in Patterson, New Jersey. And, you have to keep an eye on saturation rates, but and the amount of units coming to market, and is there a demand for that? And I'm not trying to be the fanciest guy in the block. I'm not trying to attract that new high-end tenant and encourage them to, hey, try out Patterson, you know, move from Hoboken, the high-end city, into No, I'm not. That's a risky proposition. I buy around those developments because I know those areas over time will grow in value. And quite frankly, if you want to commute into Manhattan in 45 minutes or less, there is no other option. If you can't pay $2,000 a month in rent, you kind of have to move to Newark or Patterson. You know, like there's just no other options anymore. You can't go to Brooklyn. Good luck in any of the boroughs. Jersey City, like maybe you get a hole in the wall for, you know, $1,400. But if you can't afford over $1,500 a month or something, then you have to live in Newark or Patterson. These are great areas to live in. And just geographically speaking, unless the demand to commute into Newark, it completely disappears, which if it did, I think there'd be bigger problems than our real estate values. But if that completely disappeared, you know, then we'd be in a tough spot. But, you know, I think the demand to go into Manhattan is going to remain in place as far as I can see. And that's, you know, as what we're looking for. But we underprice the market. We're the cheaper guys around the city.
Yeah. Got it. Okay. So I think by the time, you know, as you're saying, you know, the worst case, like when that route is going to disappear, I think we're going to get the flying cars by that time, you know, so don't worry about that. So, you know, so what do you think about the timing here again? Because, you know, I love you gave out a bunch of great advice, you know, big thanks for that for the people, you know, about how to actually, you can get involved into real estate, like from a passive standpoint or, you know, just actively, you know, educating yourself. So, you know, what do you think? Is there a timing issue right now? Because again, you know, top of the market, almost, like who knows, but it looks like it. So is there now is the good time for them to go and invest and buy some deals, let's say a house or flip a property, which I know you're not the big fan of, or get involved into multifamily deals, let's say actively, or just wait it out until the market is going to shift and start buying, you know, in the bottom again?
I'm never a fan of waiting to make money. You know, don't wait to get into the market. Get into the market and wait. Right? Who said that? Was that Warren Buffett, I think, or no, some famous investor?
Somebody famous, yeah.
Someone famous, someone smart with billions of dollars, much more than me or you. So, you know, basically, yeah, you know, and that's the bottom line is, you know, there's always an opportunity in one way or another. Is it hard to find a good deal right now? Heck yeah. I'll look at like 400 to 500 properties to bring my investors one deal. You know, it's a lot of work behind the scenes.
Yeah.
So, but there are opportunities. You know, you could always try to wholesale some real estate. You could try to do a fix and flip if you have a good contractor on your team. You know, I think buy and holds are the more forgiving ways to get started in real estate ownership. You know, buy a 3-family, buy a 6-unit. Generally, 6 units or more do cash flow. It's hard to cash flow on a 2 or a 3. But I built my initial portfolio of 100 units buying 2s and 3s and 6s, and there's nothing wrong with that. So I did sell off a lot of those 2s and 3s because they really don't cash flow, but they grew in value. I bought around Rutgers University, and they just boomed in value, and I really maintained them and just collected the rent on them and covered my costs, and then harvested the equity, selling them and or refinancing over time, and you know, so it's just a gift that keeps on giving. So you know, get started with a 2 or a 3 and do the buy, renovate, refinance strategy. And if you don't know what that is, then Google it and buy some books on it. And it's pretty simple. You buy it as cheap as you can. You put as little money as you can into it. You lease it out for as much as you can. And then you refinance it for a safe amount of mortgage, usually a 70% loan to value or so. And then get your money back. So you can go do another one, rinse and repeat. And that's it. That's exactly how everyone builds their real estate holdings. Use the bank's money, right? Play with the house's money, refinance that money back, lock in that 3.5 interest rate. That basically is free money. It's a couple ticks above, you know, inflation, which, you know, is just phenomenal. You know, how cheap money is right now. So take advantage of that. How high rents are, you know. So right now the market is prone, at least around here, for buy and holds. So a lot of investors have stopped buy, fix and flipping and gone to buy in a 3-family or a 6-unit, you know, and renovating it and refinancing out. So play that market, you know, play the market well. So, you know, if you're at the height of the market, which we really are nationally, basically, it's seller's phase 2 right now, which means the next step is buyer's phase 1. Okay, I don't think we're going to see another 2009, 2010, but we are going to see a correction in values, perhaps, or at least a growth is going to grow stagnant maybe for a couple of years. I think elections play a role in all that, but we don't want to get into politics.
Yeah, okay, got it. So what would be, if we just expand a little bit on that for the people to kind of absorb what you're talking about, maybe if you mention a few risks, besides, the upcoming downturn that everybody's expecting on, what would be other risks, associated with real estate investing?
Well, there, of course, are a risk with any type of investment. The main thing is the building spiraling out of control. Here's what I see. Here's how people lose their shirt in this business. They say, I don't need a professional to do real estate. I don't need a doctor to fix my cancer. I don't need a hairdresser to cut my hair. Of course you do. You need to hire the professionals, right? So they go and buy their own building and they manage it themselves, and they called up their best friend who's a realtor and said, get me a great deal, who has no idea what a great deal is, and brought you something that's sitting on the internet, and you bought it and you got a loan and you qualified for a loan, which is great. And now you own the home and you owe the debt and you're trying to manage it yourself to save the 8%. And, but the boiler breaks, you put your money into the boiler and then the roof starts leaking, but you don't have any more money because you just fixed the boiler. And now the tenant stopped paying the rent because the roof's leaking, and now you have less money, and then the hot water goes on the first floor and you don't have any money to fix that, and now both the tenants aren't paying rent, and you evict them and you go to court and they say, well, I don't have hot water and I have a really leaky roof, and the judge says, well, then you got to stay there for free until these things are fixed. You don't owe rent until they're fixed. Now you have people living in your house for free and you have no money to fix the things, and the bank wants their money. You say, just take it back, bank. And they say, nope, it's going to be a year-long foreclosure process. We're going to nail your credit and you're going to still personally owe the mortgage. So to avoid all that, go to peoplescapitalgroup.com, where we take care of everything from A to Z. We personally guarantee the mortgage so our investors don't have to. We manage everything A to Z with our management company, and we look at 400 to 500 properties to bring you the perfect opportunity.
Got it. So people probably thinking two things right now. It's either Aaron's story that he just tell us, or he's just a great storyteller. One of those.
One or the other. I think a little bit of both. Listen. I mean, the truth is, most people successfully can. You hire a management company, you buy some, and lots of people do both, right? They put 100 with us, and they put 100 into their own property. And quite frankly, after a few years, they get tired of managing it and dealing with the headaches and the tax time, and they don't really make what they thought they were going to make on it because of all the headaches and not really having the answers already figured out and experience with it. So, they end up coming back around and saying, hey, you know what, I'll just let the professionals do it. And when you buy bigger, when you pool capital together and you buy multi-million-dollar buildings, those buildings produce better cash flow than someone buying, say, a $200,000 two-family. Because, you lose one tenant on that, you lose half your cash flow, or, you can't pay your costs, or you lose a boiler, it's $5,000. That's, 2 years of income on the building. So bigger buildings are better investments. They're more forgiving, and working with the pros who've already made their mistakes and lost their money. I'm not one of those guys that says, oh, I'm such a pro, I've done so. No, I made tons of mistakes. I teamed up with the wrong people. I borrowed money from the wrong people. I've hired the wrong contractors. I've lost, 6 figures in a single flip. I've had challenges, in my career. We powered through it, at all costs. So, we learned a lot from it. And so you want to kind of team up with people that have had those experiences. They save you from having those experiences.
Yeah. Solid advice. Thank you again for sharing that. Again, if we just talk about that stuff you mentioned, people helping you not to make the mistakes. And again, you probably know, and probably you had mentors before, so maybe you can talk about, for people who are watching and they're looking to get started in real estate or just to get educated about it, like, should they get a mentor from a get-go?
Yeah, absolutely. I mean, everyone needs a mentor. You should have multiple mentors. Grant Cardone could be a mentor. He gets you out of bed, but not 100% of what he says is how you want to live your life. You want a little bit of each, I have lots of mentors, from, Jesus Christ to Grant Cardone, opposite ends of the spectrum, probably, and one says, be good to others. The other says, make money, but build your family, right? And church, something like that. So basically, I mean, you always want to be looking around for people that, you want to be like in one way or another, whether it's your personal, strategies, or your financial gains, your business, but I find my business as an entrepreneur, it is me. I am my business, and so I'm always changing my business. I'm always looking at the world around me. I want to be mindful. I want to be aware of what the market's doing, what I'm doing, what my time is spent doing. Am I burning myself out? Am I not being as productive as I can be? And am I being smart with my hours, right? Because you want to work smart, not hard always. So, and working on your business and in your business is that really tough balance that every entrepreneur has. But by, just being productive and creating systems, I make money in real estate, right? So, when you really break it down, what do I do to go from being a broke realtor to being a guy that raises money and buys apartment buildings? It's systems. Every day, wake up, I get in the right mindset and I look at my systems and I say, how can I improve these processes and these systems, people, right? Process, product is what's his name says, so always improve that system and that process. And, you'd be amazed how tied up you get in your own business and you don't realize the things you're doing, that are just holding you back. And then what you can do with a little bit of more money in your marketing, like F it, put down that 10 grand in YouTube marketing, do whatever it is, you're putting in 5 grand of direct mail marketing and you're getting $10,000 of profits. Well, what would happen if you put down $40,000 in direct mail marketing? So understand that growth mindset, and don't be stupid. I mean, I also have had stupid marketing investments where I've gone too gung-ho, and so there's no one answer, no clear line, but always improve that system, always be tweaking it. And if you're doing that, then eventually you'll start making money in one way or another.
Yeah, definitely. Great advice. Because again, I asked you that question and you mentioned systems probably 10 times already in that. So I think that's something, to pay attention to for people who are watching. Because again, if you're going to look at any type of business in any space, like all of these successful businesses, they definitely have systems in place. So something to pay attention to. Like coming back to the mentors, like there's a lot of those, and yourself, people you should follow, people you should avoid, and it's just a mix of those sometimes. And people, especially like who are looking to get started, they might get ended up like on a bad side of because I heard like countless stories where people like, oh, I invested 30K, like I didn't get anything from it, and but I don't know the situation, how it went out and why it happened like that. But for the people who are thinking like, oh my God, like 30K, man, I don't have a 30K. I can scrape $30 in my pocket and maybe go and grab 3 books that Aaron can recommend me. So what type of books you would recommend for people to go and grab? Amazon, as you mentioned, business or non-business, real estate, anything?
Sure. Well, first of all, if you have 30K, do not give it to a guru for education. Okay. I can't stand when people come to me and said, I had 30K, but I gave it to, this company because they were going to coach me. By the way, what does cash flow mean? Always start with $30 on Amazon. I mean, Rich Dad, Poor Dad changed my life. Honestly, I haven't read a lot of books on how to get started in real estate in about like 8 years, which I probably should. Yeah, but I go to conferences. I always keep up with articles and things like that. I follow a lot of people on YouTube about, raising capital, building the brands, real estate investment strategies, just business, owners, small business strategies as well. I did get started with, some David Lindahl books and things like that. And they kind of gave me the first understanding of the process, how to do it. But that was 8-10 years ago. I mean, right now I'd probably go on YouTube and start following guys. Like I put out a podcast every single week. I try to give a lot of information. I like really dig into stuff. I talk about 1031 tax deferences and in-state versus out-state investing. I dig into the Patterson market, and so just, whatever. And there's tons of guys like me. Go listen to them, but be careful of the guys who are selling you books and CDs. All right. I don't sell books and CDs. I don't sell boot camps. I don't sell coaching. I sell simply an opportunity to invest passively in New Jersey apartment buildings. So I'm a fan of selling one thing, knowing your product or your service and knowing it well. I don't want even one of those guys that, hey, I can give you this or I can give you that and give me $5 grand and come to my boot camp and then I'll pitch you another investment, And and those are awesome models. Like more power to those guys, and they're crushing it. And you pay them to learn from them, to invest in them. Like that's the syndication, guru education model. That's an awesome model, but there's a flaw in that model that you're paying someone to then give them your investment capital. You could skip the step of paying them. You can just invest as well. So so I think there is a flaw in a lot of syndicators out there that are just kind of pushing their books and CDs, and be wary of that. Do not overpay for things. Don't get caught up in expensive coaching, but take advantage of all the free information out there as much as you can, and make a strategy. Stick to it. I'm going to buy 3 family properties, 2 to 3 family in this city. I'm going to make my banking relationships. I'm going to make my property management relationships, my broker relationships. I'm going to find the deal. I'm going to spruce it up, get it renovated, lease it out, refinance. Here's people I'm going to work with to do that. Create a plan. And if you don't have any money, but you have a really darn good plan and you really educate yourself about it, and you set up pieces of your team in place, your attorney, your banker, your realtor, your property manager, your contractors, then all of a sudden, if you go to the people you already have a trusting relationship in business one way or another, or personally, they might be willing to give you the $100,000, in a first lien position to buy the first property or whatever it is, So I didn't have any money to get started. My father did give me the first loan to get started. I paid him an interest rate. It was a first lien on the property. I'm not ashamed to say it. A lot of people get started with friends and family. It doesn't mean you're a failure. It means you're using the resources around you. And, the first flip was a total disaster. We lost like $7,000, but I paid my dad back. And that's $7,000. Instead of giving it to a coach, I had experience. And that was the best $7,000 I ever spent, in my opinion.
Yeah, here you go. So again, it's very interesting because, just today before you, we had another, podcast interview, by the way. You can go and check this out. And he exactly mentioned the same. He was like, look, I don't read the books. Like, he just went to the event. He just came back from that. And he was like, look, probably people just need just 1-2 books. That's all you need. And then you just need to take action and just go and do stuff. So Rich Dad Poor Dad, definitely great entry point for you to understand how money operates and how you should run a business and why you should do that, if you want to be free again. And I would love to just talk about, passive investing, and maybe you can explain people, because again, everybody's just like going online, Facebook, Instagram, Twitter, YouTube, you see all these people traveling places, Thailand, they're just living the life, traveling the beaches, and everybody's just sitting there and man, I have my job 9 to 5, maybe 9 to 9, I don't know. And, just working and just looking, just the ends meet, and this freedom is not available for me. So maybe you can explain people that is actually available, and you don't have to even be active in real estate. You can do that passively.
Yeah, well, I think, the social media, everyone puts this image out on social media success. That's one of my flaws with Grant Cardone. I think he's kind of a braggart. I don't like that whole thing, but that's fine. That's his whole thing, So basically, yeah, so what's the question exactly?
So how people can invest into the deals passively, and what is going to give it to them?
Oh, okay. So yeah, basically, we have deals all the time. We try to find a new apartment building every quarter or so, and investors invest passively, and they actually get a share of ownership in the building. And that, passive investment into syndication is a great way for investors to get started, because you're pooling together your capital, and a lot of investors can get started with something like $30,000. That's the minimum for our fund. And you can even self-direct your IRA. So, a lot of people tend to have $30,000 in their IRA if you're over a certain age, and that's a great way to build your IRA faster and learn this industry. So syndication is great. Syndication is when you pool together capital to buy a bigger building. Bigger buildings make more money, and they're safer investments long term.
Where's the return on the cash?
So in the past, our syndications have earned about 11.5% annualized cash-on-cash return.
Okay, and that's 3x multiple after 5, or how is it looking?
Yeah, well, what we do is that was a 25 unit we bought and sold over about a 2.5-year period. So when broken out, they made it was about 11.5% cash-on-cash return over that period of time, around 26% or so over 2-year period, 2.5-year period or so. And so that was a good one where, we projected about 9.5 and hit about 11.5. You always want to underpromise and over deliver. Right now, we are hitting the mark on our current syndications, and we buy, renovate, refinance. All right. So we are always, we don't really sell. We look at real estate as a cash flow machine. Okay. We have the resources in-house here to manage it to a T, and that allows you to make a lot of good cash flow. Oh, by the way, a bunch of tax depreciation to write off all that cash flow. So you give $0 to the tax man at the end of the year. So it's like, why would I get rid of that? Why wouldn't I just harvest the equity that I force into it over time? And as I build the cash flow of the property, I build the value of the property. And then we harvest the equity through a refinance in the year 4 generally, and split up a big lump sum of cash. And the investors have the option to exit the investment at that time. And they can sell their initial share of the LLC, get back their initial investment. They keep the money from the refi, they keep the money from the cash flow, but the tax man's going to come knocking on their door and say, hey, you invested 100 grand with People's Capital Group, you made $50,000 over 5 years, and now that $50,000 is profit. So better tax strategy, and my tax strategy, and a lot of our investors' tax strategy, is to stay invested long term, do the cash out refinance again around year 9, and then do a 1031 tax deference, maybe around year 15, sell the building, put all the monies into a third party, trade into a similar but bigger building. And now we go from a $3 million building we're buying right now, that we're going to get it to appraise at $4 million, do a cash out refinance, then get it to appraise at $5.5 million years later, refinance, then sell it for $6.5 million and move into a $9 million building. And now your initial investment of $50,000 or so in a $3 million building, not only have you made that back a few times over, but now it owns a $9 million building, which $9 million buildings make more money. So, right there, it's an initial investment by trading up properly, executing the 1031 tax deference. We avoid all taxes. We defer all taxes. My tax rate's like so small. I just got out of a meeting with my bookkeeper and accountant. I don't owe any taxes this year, which is great because I paid myself 6 figures. So in my opinion, I've cracked the tax code, right? Boom, there it is, done.
Yeah, that's awesome. I just love the idea of investing, passively, actively, like real estate. On a big scale. Of course, we're not going to be talking, flipping and wholesaling, and like I know people are doing super well in these, in these asset classes. But like if you're looking to build that freedom or that wealth, like multifamily is definitely a great space. And I'm gonna put a bunch of links for you guys to go and check it out. People Capital Group, because it sounds like they're providing service for the people and they like people by the name. I'm just guessing, but maybe you can share some stuff. Again, 2020 fresh year, and kind of March, so kind of fresh. So maybe you can share some business goals that you have for your business for this year.
Sure. Well, this year we want to grow up to around 20 million in holdings. That's our goal. We're buying about $4 million in real estate in the next 30 days right now. And that'll put us up around 14 million. So we won't be too far off. And then over the next 5 years, we want to grow to 65 million as well. And we're going to keep doing what's been working, which is some of the best advice I can give any real estate investor. Whatever's working, right? The fire burning the strongest, keep putting the fuel on it, right? So you want to always be doing with that. And for us, it's the buy, renovate, refinance. We found that we do it with larger buildings, it works better. So we're going to double down on that. We have our own management company we've developed, which is really crucial to repositioning these apartment buildings. So that's it. We're really not flipping many houses right now. Maybe like 2 flips going on. We're wholesaling maybe like half a dozen properties, which is super light for us because the market isn't great for that right now. Finding a good wholesaler, finding a good fix and flip, not great, not easy. So, don't spin your wheels trying to work against the market there, right? So we're going to focus on what the market is telling us to do right now. And maybe in 2 or 3 years, it'll be, more of a buyer's market where we're going to continue to do this BRRRR strategy with apartment buildings, but maybe get a little more into wholesaling or flipping as the deals get a little cheaper down the road, if that's the case.
Got it. Okay. So another very interesting topic that we'd like to discuss here for a few minutes is, again, coming from social media space We work, like I have a social media company. We work with real estate companies like yours, and most of the time when I have people on the show, I love just that question when I ask them, because like real estate space is a little bit outdated. Like, now people are waking up and understanding the importance of marketing their own business and themselves, kind of a branding, which is a long-term play. And you mentioned that you spend some money actually in doing so. So maybe you can share with the people who are the ones who are looking to get involved into real estate, just the importance of having this online brand and presence and building that thought leadership platform, and why is it important?
Right. I mean, that's what it's all about. I basically work with a branding and data coach, and a lot of it's about understanding your Google Analytics. How is your branding keywording working? Are you putting out a professional image that's resonating with exactly who you want it to resonate with? Are your social media ads getting in front of the right people? Or are you throwing money away, getting in front of a bunch of broke people? Right. So you got to know what you're looking for. And get in front of them with the right message and the right image. And it's hard. You have to come up with content consistently, but it also has to be quality, right? So like that quantity and quality, it's a challenge. So I focus on doing the podcast. That's a good thing where people can listen to it as they're driving and things like that. And I'm just getting started with a lot of that. But what I do is I actually have 3 virtual assistants, or I keep my staff lean and mean. And one of my virtual assistants, here's a little trick of my trade, reaches out to thousands of podcasts and YouTube shows. So I've been on dozens and dozens of podcasts, right? And my story isn't phenomenal or unique. I'm not super successful or wealthy. I'm just kind of working my way up the real estate ladder here and day by day. But people want to hear about this stuff, and it's exciting. If you could tell a few stories, and I got tons of them. I didn't even include here, but a good and bad, and people want to hear it. So that's how I get out on a lot of podcasts. That does help build my brand. But these days, man, you got to have everything down from your like Google Analytics down to what you say and how you say it. You got to know your stuff. If you're talking to an investor and you don't know returns and you don't know rules and regulations in that market or something, or or you don't have the answer to like a pretty basic question, then you got to go back to the drawing board. Just know your numbers, know your market, know your business, or no one's going to really trust you with money.
Yeah, exactly. It doesn't come like it doesn't finish, like it doesn't start and finishes just with the social media. I mean, it's very important, but you're running a business. Like it's just a part of it. Like, but it's becoming a bigger and bigger part of it, because like I heard the story where a very successful guy, again in real estate space, and he was raising capital and talking with this physically, over the coffee. He was talking with this investor, and he was like, yeah, I'm looking to invest, and everything's fine. They shook hands and they, separated. And the guy went and did his own due diligence, this, investor. And he just rang him. He was like, look, you have no Facebook? Like, what's going on? So people asking this, like, cause this is not like, should I, like, this is a must in this day and age. Like, if you don't have, I come across people, they don't have a website still. I'm like, what's going on? Like, what are you trying to hide? Like, where you operate as a small business? Like, it doesn't matter that, whatever you have, 16 units, 20 units, 40 units, show people that you're a big business. Don't put in, words even, I'm a small company, because people tell the story. That's what advice. What I always tell people, tell the story. You make sure that you tell the story good. Because again, that's why I love having people just like yourself on the show, because you tell your story. And that's why, again, to knowing all the stats, like, and, like all the wording and like, strategy, it's very important, but that's behind the scenes, that's behind
and the first monies I raised, as a brand new guy getting started in this business as a realtor, what I did is I went to real estate networking events. I make a beeline for the guy who runs the event. I say, hey, I figured out how to do short sales, and or I'm getting started with my first fix and flip, and it's a disaster. Let me talk about it. Or my first presentation was "Fake It Till You Make It." That was literally the title, and I obviously was faking it till I make it, and that was the presentation. And it was probably really bad, and I wasn't such a great polished public speaker, but I just really was totally starting off. And one of the investors in the crowd was actually interested in investing in me, and I paid her an 18% interest rate. I could have got the money from her credit card at that point, but I wanted to build those relationships, and that got started with one of my first fix and flips, which didn't make money either. So a lot of challenges getting started. Had so many blocks, so bad partners I got started with, made the mistakes flipping houses, bought income properties and leased them all out to temporary TRA tenants that within 6 months, every single tenant was being evicted. Just total disasters. So, a lot of getting to where I am today is just getting myself out of bed the next day and saying, oops, learn not to lease an entire building to TRA tenants. Oops, learn not to team up with a guy who just filed bankruptcy, and figuring out those lessons. A good entrepreneur just keeps on going, just doesn't quit, right? That's really it, right?
That's the key. That's the key right here. Just if you just never quit and just continue to improve yourself, and surround yourself with the right people, and more important, right information, because we live in this information age. I mean, and what you mentioned, about the books and getting the mentors, like there's so many ways, and people say, oh, I don't have the time. When people say like that, it just kills me every time, like, I don't have the time. And it's like, then you don't have the time, to do anything because you're 60 already. So, there's always something that you can go and dig, like on like social media. That's how we connected through the Facebook. So people like asking, how do I get a mentor? Like, go and find like what Aaron needs, like find the things that he's missing in a business, maybe from social media standpoint, maybe, underwriting, finding the deals, or, capital, whatever that might be. And go and say like, oh, listen, look, Aaron, I want to help you. How I can add, value to your business. And, if you feel like Aaron is a great, mentor for you to be in, or, if you're looking to invest, whatever, ask questions. That's how you find out about things.
Yeah, and a lot of guys like me or people doing these, we have a real estate networking event, people have a lot of questions, and that's fine. And even if they're not qualified to invest, we know that just answering people's questions, having a good reputation, being a kind, open book is important. But yeah, and you'd be amazed at these people doing these events too, these real estate networking events, especially in real estate, it's a lot of networking. Real estate's like all about networking. Go to meetup.com. There's like tons of networking events probably around your town, and go to them. That, like, if you work a 9 to 5 and you want to break into real estate, go to some of these events. They're usually like weekday nights, like 7 to 9 or something. They're made for people that work 9 to 5. We do them here at our office. They're either on the weekends or in the evenings. So they're totally made for people that cannot, get out of work in the middle of the day. And that's where I built my business. And I make a beeline for the guy who's running the show, who, by the way, needs to fill seats, needs to get speakers, and whatever your story is. Let's say you're a bread salesman and you are invested $20,000 in a syndication. Well, how did you make that decision? What was your research to get there? How are you doing with that investment? What is a syndication? How did you decide that syndicator to invest in that market, and why? And that guy's totally getting started, but people are curious because a lot of people are even behind him, who are still, haven't made that first step. So, so whatever it is, just try to make one step forward, and then tell people about it, and then take another step forward and tell people about it. Before the ink was dry on my first reposition, I had a seminar going about it. That's it. Just talk about it. And people will follow, they'll listen, they'll learn, hone your message, make it interesting. And naturally, people will start asking about it, and eventually perhaps trust you with their hard-earned money.
Yeah. Love it. Great. I love that. So, okay. So for the people who are watching, if they want to get in touch with you, and before we wrap up, if they want to ask some questions, or if they're looking to invest with you, what's the minimum investment again? And what should they pay attention to? I mean, you're accepting accredited investors, right?
Accredited and sophisticated. So we work with all different types of investors. Minimum investment's $30,000, and we have investors with over $1 million with us. So, but we kind of pride ourselves on being like open to small investors and big alike. So people could self-direct their IRA. About a third of our investors do that, and we teach you how to do that. In fact, I have a seminar tonight about it, but by the time this airs, and there'll be another night. But I do that every month, and we do seminars here as well. Yeah, it's a $30,000 minimum investment, and we usually have an opportunity. every quarter. And we do actually have a 25 unit we're putting out to investors right now.
Got it. Got it. Great. So where do people find you on the social media platforms to get in contact with you?
Well, our website is peoplescapitalgroup.com. So that's the best place to get in touch with us. You can go there and punch in your information, and we'll reach out to you, send you a qualification form to get you qualified. We make it really easy to get qualified with us. And so that's peoplescapitalgroup.com. But we have a meetup group on meetup.com called New Jersey Real Estate Network. And there you can find all of our webinars if you're not local to Jersey, or if you are local here, our seminars that we do 4 times a month in the office, usually at times where people who work full-time can come attend, like the weekends or weekday nights. And so that's New Jersey Real Estate Network on meetup.com. And then on YouTube, I have a channel called People's Capital Group, and I also have the Passive Cash Flow podcast on iTunes and all those places you can find podcasts. So that's what we put out there. Check it all out, and peoplescapitalgroup.com has all that stuff as well.
Got it. We make sure that it's going to include the links down below as always. So you can go, guys, and check it out. I'm just looking at the YouTube. Love that. So as you see, very active, providing a ton of value, passive cash flow podcast. Yeah, it's a ton of value. Yeah, investment opportunities, state investing out of state. Great, great. So you definitely, guys, should follow up with this man and, engage with this content, providing tremendous value, educating you about benefits, why and how you should be investing in real estate. Definitely great, to have you on the show today, sharing all this experience. I can feel you can go and give so much more because you're a go-giver.
Yeah.
I see that. So, I love you, being here on the show and just sharing all the knowledge and experience, And guys, if you enjoyed this episode, you already know what to do. Click like and subscribe to the channel. And I'm going to see you on the next episode. Thanks very much.
Thank you.